Good morning, everyone. Welcome back to Stock Market Update Brief. This is where we do analysis on QQQ and as well as the 7 mega cap tech stocks: Meta, Tesla, Amazon, Google, Microsoft, Apple, and Nvidia. And we'll be taking a look at their support levels as well as where I think the most likely scenario will happen next week. And before that, let's check out the data first before we get into the technical analysis. So, economic data wise, there's a lot going on this week. We have the election coming up on Tuesday. So that's going to be moving the market quite a bit. Monday, there's not much going on, and the S&P Global PMI is also going to move the market. So right now, all the economic data is going to move the market more than these inflation data. So PMI here is going to move the market as well. And on Wednesday, we don't really have that much, I would say, other than the 30-year bond auction. And Thursday, the continued jobs claim will move the market for sure. Initial job claims as well. Anything that has to do with recessions indicators will move the market. So jobs and all these other indicators, and of course FOMC rate cut meeting on Thursday. So right now it's pricing in I think a 99% of a 0.525 basis cut. So we're gonna get from a 25 basis cut, and we'll see if that ends up happening. It's probably gonna be 0.25. If we get a surprise one, my guess is going to be a 0.5 if it's a surprise. I highly doubt we're going to get no cut, but for now, it's priced in 99% and for 0.25 of a cut. So we'll see how that works. And he's going to be talking about in Q&A, so Q&A will definitely move the market. And Friday, not that much. Earning wise, we already have all our big techs report last week. So not that much left, in my opinion, that will move the market as much. There's not a lot here either. I don't see a lot of semiconductor either. So yeah, just keep an eye. If any of you guys are playing any of these stocks, just make sure you guys know that earnings are coming up. And Fear and Greed Index don't tell us that much at the moment either. We're just pretty much sitting right at neutral. So it can go pretty much either way. And AI sentiment data, it did shift to a slight little bit bullish on the scale, but you can see the people that were neutral actually shifted more to the bear side. So yeah, it's just less neutral, and people are kind of shifting to both sides. So we'll end up getting pretty big swings because of a lot of participants on either side, and they may be on the wrong side. They have to flip over. So that's going to cause a lot of volatility for next week. And for technical wise, on the Qs, we talked about this rising wedge for a while. You can see how long it's been forming in the past. Let's see, it's been forming since July. It's quite a bit of time, and it finally broke bear actually on Thursday. So we had that big break with the Meta's and Microsoft earnings that day both being negative, bearish reaction to it. And on Friday, it's just pretty much an inside bar. I would say this is just pretty much a 4-hour bounce, 4-hour oversold bounce. And it's not that strong actually. So usually we get a 4-hour bounce from the reaction is a lot better than this. You can see pretty much just back tested the prior highs and then kind of just rejected there and close end of the day. So if this continues, then I'm going to zoom out to look for more in the weekly time frame where bears need to prove to me that they can actually give us a weekly downtrend. Then we'll probably say this is a temporary top that's marked at the moment, because last time it happened, right? This is such a big move. Bears had all their chance to confirm that weekly downtrend over here. They could have broken here and then confirmed that weekly downtrend for a longer term top, but they weren't able to do that, so the bulls picked it back up. Now the question is that can they do that again? But we still need a bigger drop, I would say, for that to happen. Continuation of more downside for us to give us room for that potential weekly downtrend to confirm. But for now, let's just see what are we going to get more follow through on this break of this rising wedge? Because if this was it, then it's really not that much follow through at all from the bears, right? If we, let's say, Monday and Tuesday, we kind of just chop around inside bars and not doing much until our elections, FOMC meetings, and we just come back up, then it's no big deal. This is just a bear break of this longer term pattern with absolute zero follow through, right? If we start getting more downside and continuation of daily downtrends, then that's going to be a lot different than just this little drop of a bear break right here. That's it. But for now, short term wise, if you're a short term trader, right, you can see very clear this top is pretty much just a rejection of this low. So super clear rejection right here. Um, this is pretty much just a bear break back test, and so far this back test is holding for the bears, and you can see because we can't even get over the first structure that the bears built kind of along the way. So that means bears are technically still right now in control, but they didn't really drill it down at the end of the day. So anything can happen here. Let's see if it might form a tightening range. So if this forms a tightening range, it would be something like this, and then decide to which way he wants to break on Monday or Tuesday. All right, let's take a look at the mega cap tech stocks to see if we get more clues on the direction that we want to go. And okay, Meta's still sitting in our little box that we talk about for weeks, and it looks like it probably wants to break it. So if bears cannot break below this, pretty much this box, this support level, what I want to do. So if bears cannot break this level right there, nothing's going to happen because this is pretty much the support that it's been holding. You can see this is a little last structure along the way, and we bounced from there once, bounced from there twice, and it looks like it wants to break it, but we'll see. It might form some kind of like head and shoulder here, and then potentially break, or we could just flush through it. And if we do break there, it's pretty easy. We're gonna first level I'm looking at is 554. This is gonna be because there's not a lot of volume in between here. It's gonna be an easy flush to 540. Yeah, and if we do hold this support and bounce from here, then we might look for that head and shoulders. See, but it might end up shaping up. We are getting a slight RSI divergence here, but I don't really use that to the bear side. But it could be something, just a little something extra into your trade signal on top of other confluences. Yeah, for now it's not looking that great. You can see last time we bounced from there, it was a V shape. This time it just really not doing that much. So in my opinion, I would say probably gonna break. So yeah, let's take a look at Tesla. Tesla here, we had a bull break above this tight this equilibrium that we have for a very long time. But we didn't have any follow through. Yeah, you can see we broke above this high with zero follow through. It's kind of just peaked above it, and that was it. I mean, I don't blame it on Tesla. I mean, we have what, a 25% move in 2 days, and then the market was weak for quite a bit in between here and here. So a little bit of pullback is fine. No red flags, 10% is quite a bit, but it's not a huge red flag yet. If we start cracking into the gap, then that's going to be a little bit of a red flag for me. But the problem is that if the market continues to be weak, it's going to drag Tesla down. So we'll see how it ends up happening. So far, it's bounced off of around this structure's volume support. You can see there's a lot of volume here. So it needs to pretty much hold this 246 level, which is this around this low of the structure and around this high of the structure. So that's the structure it wants to bounce off of. Then it's no red flags. But if we start cracking through here, right, then we start looking back down to 236 again. If we break through this 245s, and if we crack through, 236, it's going to try to fill this gap. It's going to get to 230 first, of course, and then it'll try to fill the gap. But if we do bounce from here, then we're looking back up to this high and this high. If we break that, then we will have a solid uptrend again. We can break this prior high. Those are the two sides that I will be looking at. All right, let's take a look at Amazon. Amazon is okay. So we broke bull out of this little small tightening range. sideways kind of consolidation, but it's still in the sideways, right? You can look very clear. Low of the range, out of the range, and we're still in the range. So nothing surprising here. We kind of came up here to the top. Solid earnings, did that pop, and then the market was weak, so it didn't really get that much follow through. But we are just under that 200 psychological resistance. So if the bulls can get over 200 psychological resistance, which is the prior all-time high as well, then there's a good chance we might look for 205. Head a little bit higher. But then again, the problem is the market is weak, so we'll have to see if it can hold up while the market is weak. If it can just hold up a little bit, consolidates while the market's weak, and then once the market bounces a little bit, then this could potentially, that's what we call relative strength, and then this could potentially be go up to 205. So let's see if it holds up. It's relative strength. It's doing that. It did for Friday, but we'll have to see if it can do that for more than one day. If it does come down, then we're looking back closer to around 191 for support. Very clear support. Very clear resistance. Prior resistance is going to now act as support. So, and the bears actually break 191, then we're looking down closer to this 184. All right, let's look at Google. So Google finally broke out of that inverse head and shoulders we've been talking about for ages, and didn't with good earnings as well. And then we had a solid pop, right? And now it's just kind of fading, which is disappointing for Google bulls. But we're just kind of back testing now, right? So after this fade, we're coming back to that prior 168 resistance again, where we broke out from, right? And we did bounce a little bit, so bulls just needs to hold this level and bounce from here. If we crack through here, this is a red flag. This is just a bull break, lacking follow through, and we're probably going to flush down to 161 if we crack through 168. And then if we break that, then we're probably looking at 155. So, in my opinion, bulls definitely need to hold 168 and bounce from here. Otherwise, it's a red flag for me. Get that big pop above after what is it, 3 months consolidation, pop above that resistance, and then just give out back in 3-4 days. It's a huge red flag for me. But at the moment, we're still above it. So let's see if the bulls can play defense here and then head higher. For you bears, yeah, just crack through it. Cracks to 168. All right, let's take a look at Microsoft. Microsoft is a bit of a red flag. So we broke bull, right? This is what we don't want to see. Same thing I talked about on Google. Break above a pattern, bull. Right, we broke out of this tiny range, bullish here, right here. We got that follow through on Wednesday, and then kind of just came back down a little bit because people are wary of earnings, so it sold off a little bit into the end of the day, and then we got that bad earnings, and boom, we're down here. So it's kind of like a break above, fake out, and we come below here. Now we're beneath the pattern, and now it's a bear break, and we back tested it on Friday, so it's kind of like a bounce. Try to back test the prior resistance, and kind of reject it too. So it's a bit of a red flag for me on Microsoft here at this moment. Although we are still trading in the longer term range here, it's a bit of a red flag after this break coming down here. So for bears, you guys probably want to come down to this 400 psychological support zone, which is pretty much this low and these lows. If you can break 400, we're definitely looking down closer to this fear low, 387 zone, which is this low and this low. For bulls, you would love to hold about 400 and for it to just go sideways, bounce a little bit, form some kind of either new patterns before heading higher. Because you've got 400 psychological, we're going to get a little bit of flush. There is a big volume gap here. So that's why you want to defend above 400 for you bulls. Yeah, let's take a look at Apple. So Apple, I'll say, is a little bit. I wouldn't say huge red flag, but it's showing up some red flags as well for me. So a lot of these mega cap techs are showing up red flags. So they continue to go a little bit lower, right? It's going to definitely drag down the queues. So I am going to be very cautious going next week, because market is looking a little bit weak here, in my opinion. Versus, you guys know what I talk about. Just follow the trend, right? When market's going up, everything is in a weekly, monthly, daily uptrend. Just play with the trend. But right now, we're very choppy, and market doesn't have a clear direction, and is looking weak. So that's when we step back and trade less, and we'll wait for clarity on the charts, right? So pretty much, I would say this is a rising wedge, bear break on Apple. Let's see, we pretty much came up to it here, and then start like this, more clear. But yeah, we came up to here, and then we broke this support, right? Bounce, 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 bear break right there on Thursday, and then another lower on Friday. So next target, pretty much first target is hit, right? First target is going to be this one. So we pretty much hit there and then bounced. Next target, if we break a little bit lower, we're looking down closer to 214, which is this low and this low and high of this structure. And so around 214. And if we crack through that, then I'm looking at closer to 208, which is this level. And if we crack through that, there's going to be a volume gap. We're probably looking down closer to 200 psychological support for bears. And we also have a small daily downtrend here as well. Um, just a little lower high here. So yeah, so this is the first shift in Apple, I would say, after a while. We haven't really have any really cleared. We had a small, tiny daily downtrend here as well, not very clear, but this one's a little bit more clear. You can see we got a lot more follow through here compared to this little chop. So we'll see if we get more follow through on that daily downtrend. Um, we will get bounces along the way, but we have to see how significant those bounces are at the moment. But yeah, starting to look a little bit weaker than all this bounces that we had. But it's still, we could have said the same thing when it was down here, right? When we were down here, that it was weak, and look at what happened. But for now, it's just a bear break with a little bit of follow through. So we'll see if it continues. All right, let's look at. Um, excuse my heater there. Let's look at Nvidia. So Nvidia, it's actually the one with no red flags, surprisingly, at the moment. So, but it kind of makes sense. It still hasn't reported its earnings yet, so it's going to be the last to report its earnings, all the way at I think November 20th. So still a while away. So, but we held this support, and we're kind of just there at the moment. So we'll see if it continues to hold. But for now, Nvidia got a little pop after hours as well, because I think it was included into the Dow. It switched to from Intel. Intel's getting taken out of the Dow, and Nvidia is getting included into the Dow. So we got that little 3% bounce after hours. So no red flags either, right? You can see there's no daily. There's a, I wouldn't. Yeah, you could call this a daily downtrend, like a lower high right here, but it's kind of like a double top. It's a small one, but not too huge of a red flag because we're still above a lot of structures, right? So if it does not crack through here, right, for Nvidia, this is the main structure I'm looking at. If it does not crack through this guy, below this guy, then it's not a red flag for me. So we could just chop around here. Then that's fine. But if we start, cracking through this guy around 130, we're gonna probably head down to closer to 125. And if we break through 125, then we are gonna be below this structure. Then we're looking at 116 again. Then that's gonna be a red flag for me. So as long as we're above this structure for Nvidia, I would say bulls are in control and they're fine at the moment. But we're not that far away from 530. So we bounce.